Ladies and gentlemen, good day and welcome to the Marathon Nextgen Realty Ltd Q4 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nachiket Kade from Ernst & Young Investor Relations. Thank you, and over to you.
Thanks, Yashasvi. Good afternoon to all the participants on the call. Thanks for joining this Q4 FY24 earnings call for Marathon Nextgen Realty Ltd. Please note that we have mailed out the press release and presentation to everyone. The results are also published on our website and also has been uploaded on the stock exchange. In case you have not received the same, please feel free to write to us and we will send it over to you. Before we proceed with the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties and other factors. It must be viewed in conjunction with our businesses that would cause future result performance or achievement to differ significantly from what has been expressed or implied by such forward-looking statements. To take us through the results of this quarter and answer your questions, we have with us the management of Marathon Nextgen, represented by Mr. Chetan Shah, the chairman of the company, and the managing director of the company, Mr. Mayur Shah, also the vice chairman. Mr. Kaivalya Shah, director, and Mr. Samrat Shah, director. We will be starting the call with a brief overview of the quarter, which will be then followed by the Q&A session. I will now hand over the call to Mr. Chetan Shah. Over to you, sir.
Thank you very much. Just one correction. Mr. Mayur Shah is not present today. He's traveling. Welcome, friends. We are in Mumbai, May 28, 2024. I am Chetan Shah, chairman and managing director of Marathon Nextgen Realty Ltd. We have announced our financial results for the fourth quarter and full year period ending March 31, 2024. The performance during the quarter and during the year has been in line with our expectations due to initiatives taken in controlling the cost and increase in prices. We have witnessed a rise in profit margins. We delivered robust performance for the full year, which underscores our strategic agility as we navigate the dynamic real estate market across various regions of Mumbai. We have successfully expanded our portfolio, enhanced our operational efficiencies, and delivered innovative solutions that resonate with our customers' demand. The cumulative results of FY24 illustrate a robust and growing company marked by increased profitability and a strengthened balance sheet, underscoring the robustness of our business model and the effectiveness of our strategic initiatives. These accomplishments are a direct outcome of our strategic efforts, the dedication of our team, and the trust our customers place in us. As we move forward, we are well positioned to capitalize on emerging opportunities, advancing our expansive pipeline of projects designed to meet the evolving needs of our customers across the value chain, from affordable to luxury segments. We are deeply grateful for the continued support of our stakeholders as we strive to achieve our growth objectives. Friends, operational highlights for the financial year 24 are: area sold stood at 561,475 square feet. Booking value stood at 817 crores. Collection stood at 695 crores. Average realization stood at 19,069 per square feet for commercial and 12,209 per square feet for residential. Friends, this is square feet of super built-up area. Now, from next meeting onwards, we will start converting it into the carpet area or RERA area. Consolidated results for the quarter show that profit before tax increased to 44 crores compared to 22 crores in FY23. Profit after tax increased to 40 crores compared to 16 crores in FY23. And consolidated yearly financial performance, which is of more importance now in this meeting. Net revenue stood at 705 crores as compared to 717 crores for the year FY23. Friends, as you are aware, the revenue from our Monte South project, where the company is 40% investor, doesn't get recognized in the top line, but it does come in the profitability. EBITDA increased to 309 crores as compared to 293 crores in FY23. Profit before tax increased to rupees 180 crores compared to 156 crores in FY23, an increase of 15%. Profit after tax increased to 169 crores compared to 124 crores in FY23, a massive increase of 36%. On the debt front, friends, the net debt decreased from a year ago of 838 crores to 751 crores as on March 24, making our debt equity ratio at 0.75 from earlier of 1.07 last year. So we are very comfortably placed on the debt equity front also. As for the cash flows, as of 31st March 2024, balance collections from sold units, which includes completed and ongoing projects, in all launch projects stood at 804 crores. Total pending estimated project cost to be incurred stands at 957 crores. Total estimated revenue from unsold inventory stands at 1577 crores. This is estimated at current selling prices. And these numbers are based on 40% revenue share for Monte South, where our company is 40% stakeholder. Friends, now I invite questions and any queries from you. Thank you very much.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Faraz from Sykes and Race. Please go ahead.
Hello, sir. Very good afternoon to you.
Good afternoon.
I have a few questions. My first one would be, sir, in the Q4, I think the area sold has been low over the past 1 year. And with respect to that, this is despite, significant ramp up and everything in the Panvel project. So if you could please explain if there is, relatively lower demand in these projects, and particularly in the Bhandup project.
Is Panvel project you are talking about or Bhandup project?
No, the overall relative demand in the other projects as well. Like you can just highlight all, that would be great.
Sure.
Panvel as well.
So for Panvel project, I would request Samyak to throw some light.
Yeah. Good afternoon. We typically have never seen it as a sort of quarter-and-quarter game, because what happens is through a life cycle of a project, there are different times when different projects are getting completed, and when they get completed, you get a push. When you launch, you get a push. To look at it quarter and quarter, I think will not be the right way, at least for the real estate industry. As for talking about the Panvel project, we have a few last few towers of our phase 1, which will now, this financial year, we are expecting occupation certificate in all of them, as well as our phase 2 as well. We are constructing quite fast, and there is a little bit of balance inventory left. So this financial year, because a few of the towers are now, going to be ready with occupation certificate, and we would have delivered, quite a lot of the clubhouse amenities, podiums, and completing. Our aim is to complete the entire phase 1 of 2,800 units this financial year. So going forward, we expect, better sales. But like I said, to look at it quarter on quarter would not be very advisable for real estate, because every project has a 3-4 year cycle. And, there are launches that get planned, there are completions that get planned. So typically we see a little bit of a, upswing in those cases, and that's what will get reflected over the next year.
Yeah, and I agree with Samyak. The quarter on quarter will be a difficult number to, kind of gauge real estate. But that being said, we have seen a phenomenal response in Panvel and Bhandup. But that being said, if you're talking about the numbers of last year, the agenda of last year was construction. And slightly lesser in terms of launches, because we have a lot, we launched quite a lot FY23 and lesser in FY24. And like I said, the agenda of FY24 was construction. So while if you look at it, the construction pace has been going at a rapid pace in both Bhandup as well as Panvel.
Yeah, so that effectively answers the questions that you try to look at it on a 12-month cycle, the bookings and the sales revenue. And if you see
it's safe to say that there is no drop in demand as such in projects.
Yeah, so just to answer that part of the question, no, there is no drop in demand. In fact, because of this Atal Setu connectivity, Panvel has seen robust inquiry. So at the next launch, we will have that inquiry really converted into sales, and there is no lull in demand. As for Bhandup also, whatever we are launching, whichever period we have had a launch, we have had a very successful track record of almost 50 to 60% of the launch flats being booked in that quarter itself. So no, there is no demand slack at all in both these locations.
Yeah, one thing I just wanted to add to this, in some locations like Panvel, we've actually been able to increase our rates also by 5-6% year on year. So there's no question of lulling demand. It's just a question of timing the launches and the type of inventory and completion. That's what we were saying.
So since you mentioned, the hike, I just wanted to understand with respect to South Mumbai and surrounding areas, which include all the redevelopments and everything. What is your outlook on the demising strategy, like say medium term, not even long term,
Yeah, the families are growing, and South Mumbai land parcel is definitely not growing 3 sides being seen. So the density is increasing in South Mumbai, if you see. And with density increasing, the amenities that a builder can provide in new redevelopment projects are also lesser and lesser. That's why we see a lot of South Mumbai moving towards Lower Parel, Baikala region, and that's where we are seeing growth in our both the projects, Marathon Feature, where a lot of offices are shifting from city to Lower Parel, and in our Baikala project, a lot of residences from Walkeshwar, Federal Road, and Kulaba are shifting to Baikala.
So, like over the last 2-3 years, what would be like the general trend of the price hike in Monte South?
That's about, if you look at 3 years, then it is about 25%. Last year has been about 10%.
Okay. So I have just one last question. So your next zone phase 1, I think in Panvel is almost complete. So and your estimated date is around, I think Q3 December 25.
Yeah.
So is there any chance that this project can be done ahead of schedule, or we are expecting the same timeline?
No, most likely it is going to be ahead of the schedule. In fact, a lot of apartments have been given possession as part occupation also. So it's most likely going to be ahead of schedule, but the deadline has been December 25.
December 25. So, technically, legally, we cannot sort of claim anything else. But we, practically speaking, we are ahead of schedule by about 2-3 quarters.
Oh, brilliant. Thank you so much, sir. Thanks a lot.
Thank you.
Thank you. We'll take our next question from the line of Ninad Sabnis from Sabnis Finance. Please go ahead.
Yes. Hello. Good afternoon, sir. So I have two questions. The first question was, have you considered a villa or a bungalow project, especially in the suburb areas, right? Suburb areas where the price of South Mumbai can't be seen. Has the company explored a luxury villa project in these areas?
No, we have not. If you are talking about MMR region, yes, Panvel and all those faraway places, it's still possible. But if you see city and suburb, like suburb up to Mulund or suburb up to Borivali, all these SSI, potentials of 2.5 restrict the potential of villas being constructed, because then you will not be exploiting the full potential of land. So I don't think in the city of Mumbai and suburbs of Mumbai, villa projects are possible. In MMR region, yes, far away, we have explored one in Panvel area, where it could be a combination of flats and villas, but there is nothing on immediate pipeline.
And you would say the same for Thane and Dombivli region as well?
Yes, Dombivli still that is possible somewhere, but Thane again is almost like Mumbai.
Got it. All right. The second question I had, that you earlier mentioned that we have generated significant amount of cash flow, right, and that has reduced our debt. So is there any plan to refinance the existing debt, and what's the current rate of interest at which we have borrowed, and what's the plan with that?
Yeah, we in line with our philosophy of reducing debt and making the company robust, bettering our debt equity ratio. We have reached 0.75, which was our target a year ago. So that is what we have achieved. After achieving the debt reduction, the second thing was actually cost of debt. How best we can do that. So we have done refinancing of substantial debt, and Raghuveer will share the numbers.
To add on to what Chetan said, FY23, our average cost of debt was 15.5%, and FY24, our average cost of debt is around 12.5%. So we have refinanced quite a lot of projects and brought down the rate of interest. So, and we're continuously doing so. So we're repaying the debt as well as refinancing the debt, and hence bringing the cost of debt also down.
Understood. And as you say that, are there any plans to then raise funds for these new redevelopment projects?
Yes, new development. See, for the growth of the company, funds are definitely required. Either it could be from equity or it could be from debt. Now, with our equity growing because of the robust profit numbers also getting added into reserve, our net worth growing, from that perspective, even further raising debt will not be a big problem. And there is a possibility that we may want to look at equity option also.
Got it. Thank you, sir. Thank you so much, and best of luck for the future.
Thank you.
Thank you. We'll take our next question from the line of Ravi Mishra, an individual investor. Please go ahead.
Good afternoon, sir. Thank you so much for the opportunity. I have a couple of questions. So starting with our EBITDA, this quarter has been among the lowest in the last 4 quarters. So how do we anticipate it to shape up going forward?
See, EBITDA has always been in the range of 30-35%. So this last quarter, EBITDA margin was
40.3.
40.3. So I don't see where you're saying that EBITDA has gone down. However, what is actually of more importance is the profit margin. What is that happening on an annual basis? If you see, our profit margin has also grown, and profit amounts have also grown in sync with our network growth.
Also, to add on to that, year-on-year EBITDA has always grown. I think you're looking at quarter-on-quarter EBITDA. That fluctuates quite a lot. Year-on-year, if you look at FY20, we were at 30.9, and FY24, we're at 40.1, and the trajectory is, rising from 30 to 41.
Understood.
Yeah.
So, further on, do we anticipate more contribution from Bhandup and Panvel versus that from Lower Parel and South Mumbai in FY25? And in that case, how will it affect our margin and gross realization per square feet?
We have always had a balancing thing, as you understand. Marathon has 3 segments in which Marathon operates. One is, city where it is a higher value premises, and then there is a mixed segment which is Mulund, Bhandup, Vikhroli area, and third segment is Dombivli, Panvel. We try to make that each of these segments contribute equally to the growth of the company, and that's why when one segment is not doing well, the other segments actually take over. But fortunately for us, all 3 segments have been doing robustly well, and we don't see any imbalance there. As soon as a project gets over, say in South Mumbai, we take up another project. Like in Monte South, we had Tower A and Tower B, and now Tower C is also coming up. And then we have a balance. If you see in our presentation, there is an ongoing project slide where Tower D is also in the pipeline. As soon as we have a lesser contribution from city, we launch that inventory also. So I don't see any lesser contribution from city, but equally important is growth in all 3 segments. So we keep on monitoring that.
Yeah, to add on to that, around 6,000 crores of 6,000 crores plus inventory of Monte South is yet to be sold/launched. So that will be coming in the next 3 to 4 years as we speak in terms of launches. While Monte South in terms of area will be lesser and Bhandup in terms of area will be higher, but I think in terms of revenue contribution, it's a balanced portfolio.
Understood, sir. Understood. So one more last question from my side. So as we can see, the company has a significant track record of projects delivered before the year 2000. All right. So which will now be old enough to qualify for redevelopment. So does the company have any plans to redevelop its own old projects? So just wanted to understand what is the potential opportunity over there.
No, we keep on getting redevelopment proposals from our erstwhile developed projects and residents. However, we have not actually executed any of these projects. Mostly they are in Mulund area. So maybe in future we will get into that segment. The profitability as we see in suburban redevelopment projects are not very high. So they are not really attractive. However, redevelopment possibility in cities actually can be considered. So currently we are looking at such opportunity.
Understood, sir. So that's from my side. Thank you so much, sir.
Thank you. We'll take our next question from the line of Rakesh Sali, an individual investor. Please go ahead.
Yeah, thank you for the opportunity. I have one question. Can you just quantify the gross development value of our land parcels held in Panvel, Thane and Dombivli? And is there any potential project launch lined up in FY25?
GDV value would be very high. So currently we have quantified those numbers in our presentation for projects that will be coming up in next 3 years. So beyond that we have not done. Another thing about your pipeline for launches, yes, we have launch pipeline that we have decided that we will be coming up. One in Baikala, one in Bhandup, and another opportunity in Panvel also.
Yeah, so FY25, we'll be launching in multiple areas. The Monte South Bhandup as well as Panvel. In all, we'll be launching around 12 lakh square feet, and the GDV of that will be around 14 to 1500 crores. That's this year's launch. And next, regarding the Thane, Dombivli and the rest of the land, I think the GDV is too high to actually quantify it.
Okay. Thank you for that.
Thank you. We have a next question from the line of Sushrut Gokhale from Categorization Investments LLP. Please go ahead.
Hi. Am I audible?
Yes.
Yes.
So around 35% of our potential revenue from unsold inventory is expected from Mount South. So what strategies are underway to increase sales and collection from this project?
Collections are on line with whatever booking we have done. There is no lagging collection. The bookings are also robust. Whatever we were booking, 1 year ago, we are doing almost double that booking. So collection, pending collection number increases because the booking numbers increase. But it is in line with or in sync with the businesses that we are running in Monte South.
Yeah, so Monte South FY23 we did around 250 crores of business, and FY24 we did around 600 crore plus business. So sales are increasing, as Sekanbhai said, and collection also is actually directly proportional to the construction, and construction is going at super speed. As we speak this year, we should be expecting the OC till the top floor of Tower A, and Tower B is going at rapid pace as well.
Yeah, does that answer your question?
Yes, and also by recent Trans Harbour link, so Panvel has now become more accessible, right? So are we seeing any price hikes or further hike in our Nextgen Phase 3 project?
Yeah, I'll ask Samyak to answer that.
So over the last 2 financial years, from the sales that we've done, about 5 to 6% increment we have managed to get in that project. But yes, as in when we do a new launch, there is scope for more upside. We will try and price it such that we can get a higher price and thus higher margin. Obviously, without compromising on the velocity of sales. We've seen steady sales over there, but sometimes when you hike it too much, you see some impact on volumes which we want to avoid. So yes, when we launch it, we will take an appropriate cost.
As an interesting fact, if you use Trans Harbour and go towards Pune or Lonavala, you will be passing through our site, and so now the visibility of our project at Panvel has increased tremendously because everybody who is passing by is able to see the neon sign that we have put up on Nextgen, Marathon Nextgen. So next time you do go through that, please observe while you are driving.
Sure. So when are we planning to launch this Phase 3?
Phase 3 we are expecting probably Q3 or Q4 of this year. We're taking all efforts to launch it this financial year.
Okay. Thank you. That's all from my side.
Thank you. We have our next question from the line of Divakar Rana from Prudent Equity. Please go ahead.
Hello. Sir, this quarter the performance was muted due to the lower uptake from the commercial segment. So what is the future outlook of the same?
So we have pretty good inquiries. Currently the inquiries are for leasing of commercial premises, and normally when such leasing inquiries do take place, there is a longer period of gestation because there is a tendering and other efforts that we need to do. So all these inquiries will get resulted during the financial year 25. Normally after Diwali, that is a December period, there is a lull in the new office uptake, what is visible.
Just would like to add, in office generally Q4, because it's the end of the financial year, we have typically observed it to be a little slower. But on an annual basis, if you check last year, I think we've done about 230 crore of sales in FutureX. What is interesting to observe is we've also been able to get a better price. So we've almost got much better prices even quarter on quarter, and it's 20% plus, if you compare between Q1 and Q4. So that is definitely adding to the margins, and we would hope to continue such a similar performance next year.
Okay. Sir, after this refinancing and the debt repayment, what is the basically expected interest cost for the FY25?
Current is 12.5.
No, the amount 750. So it's a 12.5% is the effective cost, and 700 is 750 is the debt. So if you multiply, that's about
Next year's projection.
Yeah, so that is the projection. If we don't intend to reduce it substantially. However, that 12.5% may come down marginally. So that's about 80 to 90 crore of interest.
Okay. So what was the basically, I missed that, what was the final cost, average final cost is that?
12.5%.
12.5%.
And 750 crore is the current debt.
Yeah. Okay. And so what was the basically launch pipeline for FY25? I believe you said 12 lakh square feet, right? So what are the projects are we launching in that 12 lakh square feet?
We just answered that, but we'll repeat the answer. Yeah.
So we're doing some launches in Monte South, Neo Park, Phase 3, Nextgen, we're doing some launches, and Neo Valley, the land that we acquired in the first quarter of FY24, we'll be doing further launches. In totality, it will be 12 lakh square feet, and the volume will be around 1,400 crores.
1,400 crore will be share of Marathon, right?
No. In Monte South, we have to factor in around 40%, which is we'll have to reduce 600 crores by 40%. So that will be around 300 crores lesser.
Okay, that's all from my side.
Thank you. We have our next question from the line of Jainil Zaveri from J&J Holdings. Go ahead.
Yeah, hi. Thank you for taking my question. I just wanted to know that what is the booking value that we are targeting for next year? So FY25. This year we did, I think, 800 crores. Only Marathon's part of it was 800 crores. So what is it? What is like the target for next year?
In general, if you see, we have been growing between 25 and 33%. So it is 1/4 or 1/3 of new additions in booking as well as turnover. So that's how our internal targets are, that the company will keep on growing at between 24 to 33%. So if we do that, it would be more than 1,000 crore and less than 1,200 crore.
Okay, 1,000 to 1,200 crores. And in terms of finished inventory across all our projects, what would be that amount, of finished, OC received kind of flats or floors?
Yeah, I'll have Kaivalya answer that. Yeah.
Yes. So in terms of, just to rephrase your question, the question is OC received but unsold is your question.
Yes, correct.
So around 2,25,000 is the area which is OC received but unsold. Primarily, the main figure is in FutureX. Commercial sells post OC, quite a lot of it, and FutureX, that's how the sales will happen. In terms of our residential, if you look at it, post OC, the inventory is around 5 to 7%. So the balance inventory is in Monte South and Nextgen.
I would just like to add one more thing. So in the OC but unsold, there are some portions which are leased as well. that get added. So technically, it's not unsold per se. It is available for us to be released and sold at any time, and that number is as around 71,500 chargeable area in future area. So that also goes in the component of OC burden.
Okay, so that is part of this 2.25 lakh.
Yes, it is. Yes.
Okay, and what would be the value that you all ascribe to this 2.25 lakhs in crores, approximately?
That would be around 100. So future it's like I said, 125 crores or 1.25 lakhs will be around 250 crores, and rest of the residential will just 100 and so rest will be around 130 crores.
Okay, so commercial is 250 crores, residential is 130 crores, and total is 380 crores.
Yeah.
So 380 crores is essentially you could sell all of it and you can get all of that in cash, as and when you sell it, approximately, is what you're saying.
Yes. Correct. Yes, correct.
Okay. And what is the kind of, sale rate that's happening on this OC plus unsold? Like, what was it, if you can give me a comparison of what was it like last year and then what is it this year?
These are not dead inventory as such, because some OCs are
they're continuously moving, I understand.
So it gets added there, and some of the OC received but unsold got sold during the year. So it is that inventory comparison would not be a perfect number. However, we can give you the number.
Yeah, so last year Monte South was selling at around 22,000 on super built up area, and this year we have sold it at 23,500 plus. So that's the kind of rise that we have seen. Now, typically post OC, there is always that GST benefit that the developer has. Now you can add like more 5% on top of that 23,500, or have that leverage to negotiate and close the transaction. That's about Monte South, and about Nextgen also we have seen similar rise. And again, like I said, the GST benefit is always available.
Okay. But yeah, I understand the point that you can't compare it because it will keep on moving. The OC plus unsold flats would keep on moving. Okay. All right. Thank you so much.
Thank you.
Thank you. We'll take our next question from the line of Riya Mehta, an individual investor. Please go ahead.
Hi team. Good afternoon. Thanks for the opportunity. So my question is, do we have the operational capability and management bandwidth to simultaneously launch more projects and scale up our construction run rate alongside the ongoing projects?
Yeah, we at Marathon are into real estate, A to Z of real estate, meaning acquisition of land, planning on the land, survey. We have the whole team. We have about 880 people staff. So from execution perspective, if you see, you can say that we are only 60% of the bandwidth that we are utilizing. The why 60%? That is always because of the want of the right opportunity and want of the acceleration in sales numbers. So these are the two things that will hold us back. Otherwise, in terms of execution capability, we have a lot more to go even with the existing strength that we have.
Okay. Thank you so much. That's all from my side. Thank you.
Thank you. We'll take our next question from the line of Jojo Saju from Alpha Invesco Research Services. Please go ahead.
Yes, sir. Thanks for the opportunity. So my question is regarding the Monte South. So you already mentioned you have done very well if you look at the yearly basis, but if I'm looking at the quarter-on-quarter basis, so you used to do...
Mr. Shaju, can you use your handset mode, please?
Yeah. Is it better now?
Yeah.
Hello. Yeah. So my first question is regarding the Montessori project. So you already mentioned you are doing very well on, if you look at the yearly basis, but on the quarterly basis, you used to do a pre-sales of, upwards of 100 crores in every quarter. But in Q4, this number has came down drastically, like below 50 crores. So is there any demand slowdown? Can you just give some details on the customer inquiries, walk-ins and all?
So the inquiries and other things are still robust. What happens is there is a festive period, if you see Diwali and Christmas period, during which a lot of holidays are there and people do come for with the family for inquiring and finalizing. So always December quarter has been a good quarter from that perspective. However, some more information Samyak will share on that.
Like we had told you about Panvel as well, quarter and quarter may not be the right way to look at any project. We've seen good sales over there over the last financial year. And we are quite confident, for the next financial year also, because like Kaivalya mentioned, one of the towers is we are aiming that it receives complete OC, and that gives a lot of confidence to clients who are buying ready to move in or clients who are buying under construction. So on a overall, a little 1 year, 1.5 year trend, I don't think there should be anything to worry about.
Okay, sir. And sir, on the construction side, what is the construction status for the Tower C? And does we start giving deliveries for Tower B also?
Tower B possession date. Tower B completion date. So Tower B, we have already reached about 40 plus floors of structure, that is RCC work. It is totally a 65-storied building. So we still have 25 more floors to go. Booking has also opened only up to 45 floors. So upper floor booking is yet to be launched. So that is in brief the detail about Tower B. The total area of Tower B is about 6,70,000. 6,25,000 square feet.
And the RERA deadline of the project of Tower B is December 27, and we are very much in line to complete within timeline.
Okay. And what about Tower C, sir? What is the construction status?
Tower C is at foundation stage. So we are just completing the foundation and coming to the plane.
Okay. Okay, got it, sir. And on pre-sale side, you mentioned you will be doing roughly 1,200 crores for this financial year. And if I'm looking at the projects in line for the launch and all, you have roughly close to 7,000 crores worth of projects, including the land that you have acquired in Q3. So with this kind of pipeline in projects, can we do roughly 2,000 crores annual pre-sales in next 3 or 4 years down the line if the cycles continues to be in our favor?
So whenever we are doing our internal planning, we are on a conservative side, and that is what we have said. However, the likely number is going to be much higher than what we are predicting. Yeah.
Okay. So is it safe to assume that you can do roughly that kind of 2,000 crores worth of pre-sales in next 3 years?
We have a total revenue. So you are right in that those GDV numbers will be achieved in 3 years' time. But how that is going to be broken up in first year, second year, third year is yet not very certain numbers. But yes, in 3 years, those 6,000 crore numbers will be coming in.
Okay. Okay. Thank you. Thank you very much, sir, and wish you all the best.
Thank you, Jojo.
Thank you. We'll take the next question from the line of Dr. Amit Vora from the Homeopathic Clinic. Please go ahead.
Yeah. Good afternoon, everyone. Good afternoon, Chetan Bhai, Samyak, and other dignitaries.
Good afternoon.
Yeah. My question is regarding a lot of real estate investment trusts are coming, like Brookfield, and they have planned a lot of big investments in India. So are we, about the topic of refinancing, are we planning to, join with them or any types with them? And in that, can we take the benefit of those REITs?
Yeah. So we don't have too many, different projects where we have these assets. So we are not really participating in REIT aspect of this business. However, Parmeet will throw more light on this future business. Yeah.
Yeah, so we have explored, REITs in certain cases. Usually, from our understanding, where it works well is when you have a lot of leased commercial inventory. And we did explore that in FutureX, but since in FutureX we had sold a lot of, the inventory, and it was a mixed bag with leasing and selling. It was not very attractive as an option for REIT. But yeah, it's a really interesting new instrument, and most definitely in our future commercial projects, with the right kind of scale, it could be a really good, instrument for us to explore.
What we are now exploring is there is a mini REIT which is SME REIT is also permitted. So currently we are exploring that even single leased premises can be launched as a REIT. So that is going to be interesting. We have not seen any, actual execution done. So we are waiting for some examples being set there.
Okay. Sir, about our next commercial after this at Monte South, are we planning a commercial or a retail in the mall or commercial offices in future months?
Retail mall we are not in. We are not planning any launches in retail and mall. We do have retail shops coming up in some of our buildings at road facing, but that's not a mall kind of a thing, but it's a street retail. However, on commercial, by commercial I mean office spaces, as soon as we complete, office building, we have a ratio that we try to manage of residential versus office. So we are now completing FutureX. In next 12 months, we intend to have those inventories being sold, and then we will have a commercial project launched in city also. In fact, in Monte South, there is a tower, fifth tower, 4 residential, and fifth one is commercial, which also could be launched. However, there is nothing in immediate pipeline, so it's not likely to be launched in next 1 year.
Probably next year?
Yeah, probably.
We're still in the planning stage with that.
Yeah. I get it. Thank you so much, sir. Thank you. Thank you, everyone.
Thank you.
Thank you. We'll take a last question from the line of Jatin Kedarpal, an individual investor. Please go ahead.
Hi, Chetan Bhai. Is my voice audible?
Yes, Jatin, go ahead.
Thank you for taking my call. I wanted to just share that I've been a long-term shareholder with Marathon, in fact, for more than 14 years, I think. And I'm so happy to see Ramnik Bhai's vision, ethics, legacy has been carried forward so nicely. And with the next generation young guns now coming in, Kavalya, Samyag, I think on the board, I think they'll bring in their own strengths and future growth trajectory. So congratulations on that. I had a few questions, and most of my questions actually have been answered, but I just wanted to understand on the FutureX, I believe the OC for the final flows is already through. So are we trying to monetize that by selling them in this financial year? And also on the Monte South, I heard you saying that, you don't really recognize the revenue. So is there a stage where the revenue kind of starts showing in the top line? And one last question, sorry, was we have a huge land bank. I mean, our company is holding huge land banks in Panvel, Bandung, Mulund, which I actually track very closely for many, many years. And so I wanted to understand we should probably try and monetize that. Some of it is being monetized. So maybe we should maybe the young guns can aggressively start monetizing those land banks.
Yeah, thanks, Jatin, for putting me in the old land. Yeah, but you're right. We have in this last board meeting, we have added Nextgen, two of the Nextgen into the board. Kaivalya and Samyak have joined, and they are gung-ho about growing the company to next level. What Ramnik Bhai had thought and what we could take it, and now they are going to be taking it forward. As rightly mentioned by you, FutureX has received the OC, and most of the inventory to be either leased or sold during this financial year. So that is going to be a big chunk of commercial revenue that will show up in this financial year. As for the land bank is
Monte South revenue.
As for the Monte South revenue recognition, we follow percentage completion method. So where some of the project gets first time recognized when 25% of the construction cost of that building is incurred. So that is the trigger point for the first recognition. And of course, we recognize all the revenues where more than 10% of agreement value is received and agreements are registered. So those are the things that are getting recognized. Maybe Kaivalya will throw some more light on it.
And you're right that Monte South revenue doesn't show up in the revenue that we the display on our the revenue basically 700 crore doesn't display. Yeah.
So basically, Monte South is being executed by an SPV. In that SPV, listed company has 40% investment, and other partner has 60% investment. So revenue get recognized on a person who owns more than 50%, and we recognize it as a line item for profit. So it doesn't get recognized in revenue. If you do want to know the effective share, that is 40% of the revenue which did not get recognized, that amount is 240. That amount is about 240 crores. This is 40% of the revenue if we were to recognize. Of course, the accounting principle tells us that that will not come in the top line, but the profits will be added as a line item.
And I wanted to also just understand, I'm sure we are targeting a nice 25-30% growth for FY25. But what I would expect also is, what I could sense from the Q4 result was the revenue drop, which is absolutely understandable. It kind of fluctuates from quarter to quarter. What I could understand and hear from the earlier talk was that we are trying to target around 1,200 crores of top line for FY25. So that should probably, I think, generate a healthy bottom line. I was very happy to see the net bottom line increase, which is a great way to work for our company. So please keep up the good work, and Kaivalya and Samyak, all the best. I'm very happy to see you guys on board, and since our company is a good long-term dividend-paying company, bonus-paying company, I'm expecting a better dividends and bonuses to come in the near future, which I'm sure will come with time as we grow. So I'm very happy. Thank you very much. Thank you very much for taking the call, and thank you very much for the good work. Mayur Bhai is not there today, but please give my regards to him as well.
Thank you, Jatin Bhai. With blessings from Arjun Shah and what me, Samyak Parmeet, we need to do is, have his values, intact. And while having his values intact, make sure we're jumping and, taking the, organization at very fast pace forward in terms of sales, in terms of construction pace. That's the agenda for us, having faster sales and a faster construction. So that we hope to do that.
that's there in your DNAs for both of you and all three of you. So you don't have to worry. I think what you need to bring onto table is to envisage a better kind of a future for the group and for our company. I think that'll come through. So all the best to you guys.
Thank you.
Thank you. As there are no further questions, I now hand the conference over to the management team for closing comments. Over to you.
Thank you, friends, for participating in conference calls. Questions that come to us are sometimes, open up new avenues of thought at management level. So do keep participating in such conference calls and enlighten us with the views and perspective that you bring on a real estate company. Thank you very much.
Thank you. On behalf of Marathon Nextgen Realty Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.